Well, greetings, Series 7 test takers. This is the Series 7 guru coming to you from my studio in fabulous Las Vegas. Shout out to Jordan and the rest of the team at Mometrics. They gave me recently permission to give you a free look at their content through the explication of their practice exams. So I'll be explicating a Mometrics practice exam, put it in the Series 7 practice test playlist, and I'll also at some point circle back. As soon as I got the permission, I bought their product. It seems like a pretty good value. I haven't done anything with it yet, but it's a study guide and a extra bank of questions for about 20, and I think the other's 50. So I think all in I was on 75, 80 bucks. I'm not an affiliate. There's no affiliate program. I don't receive compensation for TestGeek, who allows us that same free look, or Kaplan with the discount codes. Same thing here with Mometrics. I am not receiving any compensation, but I will make a little review, and I'll give you a link if you want to get the answer key and rationale, just like I'm Brian. I'm not geared to be able to do that. So if you want a physical copy of this and the rationale, you can get that by going to Mometrics and buying the study guide. This is the first of the practice exams that are in the study guide. So let's get started. Which of the following is the best representation of a net revenue pledge for municipal bond? Munis are very testable, about 20 questions on them, and this is certainly one of them. You know, I think of the way they'll ask on the test is the operations and maintenance fund has priority, right? So gross revenues, and there we go, operating costs. So let me get out my A is going to be our right answer on that. Two, each of the following statements is true of an open-end investment company. You definitely want to be able to contrast open-end and closed-end companies. New shares are constantly being issued. True. So now remember, we're looking for something here that is false, something that is false. Only common stock can be issued. That too is true. Open-end funds only have one class of equity. So, you know, they can own preferred stock, they can own bonds, but they can't issue preferred stock and they can't issue bonds. Investors may redeem their shares. The NAV, investors purchase the shares at NAV plus a commission. Well, it's not really a commission. It's the NAV plus the sales charge. So given that answer set, I'm going to go for D. By the way, if I get any of these wrong, I will circle back and let you know which ones I've got wrong or right or whatever the case may be. So which two of the following investors would benefit if the strike price of an option and the market price of the underlying stock remain the same? So on all the speculative option strategies, we're either buying volatility or we're selling volatility. Either volatility is something we seek, we want. For example, if I buy a call, I'm buying upward volatility. I got to be right about three things: direction up, how far, and timing. And here it says the strike price, the market price. The buyer of a straddle. You should know that buyers don't benefit if there's neutrality on the stock in terms of volatility. You have to be a seller of an option to benefit from that. So seller of a straddle, yeah, remember, seller of a straddle wants the market price to stay within the upside and downside break even. So we need Roman numeral 2. Now, on the actual exam, there are no multiples on the Series 7. The buyer, nope. The seller of an at the money put, doesn't matter whether it's at the money, but what they're saying is if it's at the money and it stays there, remains unchanged, right? It'll expire and you get to keep the premium. So the answer there is 2 and 4. 2 and 4. D as in dog. Which NASDAQ level is known as the inside market? So the inside market or inside quote is the highest bid and the lowest ask. The highest bid and the lowest ask, and that is level 1. That shows you that. Level 2 actually shows you the market makers and their quotes. Level 3 is what market makers have to input their quote. So the answer to 4 is A as in Adam. I did mention it. If you've been with the channel for a while, this is practice test 8. By the way, sometimes they don't match up because I move them around, but in terms of what, there's 8 there, and these are the orders I suggest you watch these in. But you should hit pause, try and answer, project whatever you think the answer is, hit play, and see, if you agree with Dean. Doesn't mean Dean's right. I'm pretty sure I'm going to be right on most of these, but that would be your game plan. Again, this is my first exposure to Mometrix content. So far, so good. I haven't seen anything that makes me think this is anything other than a good practice drill and rehearse. So the answer for is A is an Adam. Diane Domestic has a margin account that holds securities with a current macro value of 35,000, a debit balance of 18. So you should definitely know the classical margin equation. The classical margin equation is long market value minus debit equals equity. So 35,000 minus 18, I believe that's going to be, let me get my calculator. There's no sense in missing arithmetic questions because, I'm terrible at arithmetic, so I'm going to use my calculator. 35 minus 18 equals 17. All the following are true. The account is currently restricted. Well, restricted is below 50%, so let's take 35,000 times 0.50. Yep, it's restricted. I'm looking for something that's false. The account has SMA of 0 as it sits to now it does. To get SMA, remember, you have to have excess equity. Don't have it here. She'll receive a margin call. No, there's no problem when you go below 50%. That is not a problem. The only new rule for somebody who's below 50%, and that's why it's called restricted, is because there's a restriction on how much of the sales proceeds they can withdraw from the account. Well, they can withdraw as 50%, but nobody thinks that has a retention requirement. So C is not true. So, and remember to ask us what is not true. Diane will receive a maintenance call if it drops below 24 grand. Well, again, we may or may not want to continue on once we know that we're looking for C as our answer. But the way we find out market value at maintenance is we take the debit register, $18,000, and we divide by 0.75. And we find out that is indeed 24,000 market value of maintenance. So below that, indeed, there would be a maintenance call due promptly. Number six. Franch Enterprises deals in widgets in both the U.S. and in Europe. In both. Okay, just making sure I'm jumped into this pretty quickly, so making sure all my controls are working. Anyways, pause for the delay. The company accepts most payments within 30 days of billing and wants to take a hedge position. So hedge means offset risk. So if I'm in widgets in both the U.S. and Europe, protective house move in currency markets, which of the following would accomplish this goal? So I'm afraid when I sell my widgets in Europe that the euro is going to be weaker. It's going to take me more euros to get dollars. Right. So I think the euro is going to go down in value. So what I'm going to do is buy puts on the euro, hoping that, again, I'll make up in that put contract what I'm going to lose in the spot market. The spot market is the current market. So A. Now, remember, we have a good memory aid device for that. EPIC, exporters buy puts. And Franch Enterprises is an exporter. So the answer is A. Corporations may issue which of the following debt securities? We should definitely know that mortgage bonds, certainly secured by real property, income or adjustment bonds that trade flat and only pay interest when and if earned, certainly. So I need one and I need two. You should know that moral obligation bonds are a type of municipal bond. And you should know that double barrel bonds is a type of municipal bond. And so the answer here is A. 1 and 2. In a margin account, each of the following transactions will cover a put writer. So when you write a put, you have an obligation to buy the stock at the strike price. You have an obligation to buy the stock at the strike price. So a cash deposit equal to the exercise price of the put. So I'll just make up a number here. Let's say the strike is 40. I'm a margin clerk, and I see that you have $4,000 in your account. You have cash equal to the aggregate exercise price. Indeed, that works. Purchase of the sales, purchase of the stock. No, remember, because the purchase of the shares doesn't do you any good because you end up buying more. No, you need to be able to, have the position of the stock that matches the exercise. And so it's not going to be B. A short sale of stock, yeah, because if I get exercised on the short put, I buy the stock, I give it back to the person I borrowed it from. So that does indeed work. The purchase of a put with the same exercise price or expiration. Yeah, that's a put spread. So somebody sticks it to me, I stick it to the next person. So that works. So the answer to 8 is B. A corporation wishing to open a new margin account, would need to provide the firm with which of the following. So I like these questions. Again, this is my first exposure to Mometrix content. And so far, I'm liking the Series 7 practice exam in terms of content. What I'm not liking is they're giving us a lot of multiples, and all test prep vendors do, even though you will not encounter multiples on your Series 7. So that being said, we need to copy the corporate resolution, and we need a corporate charter, and that corporate charter has got to specifically say that that's permitted. And so the answer to number 9 is going to be A. We don't need, income statement or list of issued securities. That's just nonsensical. So the answer to 9 is A as in Adam. 10, a customer has a short margin account with ABC Brokers. The account currently has a short market value of $52,000 and a credit balance of $104,000. So the classical margin equation short is credit register, credit balance, 104, minus short market value equals equity. So equity here is 52,000. Now, at some point in time, it must have been below that because we have an SMA here, a special memorandum that was made to our account that we had $3,000 in excess at some point in time. None of the short stocks have a price less than $5 a share. What is the minimum required maintenance in this account? And so we're going to take the short market value, which in this case is 52,000. We should definitely know that minimum maintenance in a short account is 30%. And we get 30%. The answer is A, 15,600. Right? I took the credit register and I divided by 1.3. Or excuse me, I took the short market value and times it by 30%. Should know that. The other thing I'd be prepared to do here is market value maintenance, which would be credit by 1.3. When investing in a variable annuity, an investor may select the following. So you're going to get a handful of variable annuity questions. It's nonsensical to say that you want to make a periodic payment into an annuity that's immediately going to pay you. That's just nonsensical. 2 makes sense. You want to give me a periodic payment into a deferred annuity. That makes sense. 2 makes sense. A single premium. You want to give the insurance company a lump sum and start annuitizing. Annuitizing just means turn it into the income stream immediately. Absolutely. And a single payment. Yeah. So it's 2, 3, and 4. I don't know if it's helpful. I think of a variable annuity as a mutual fund with an insurance wrapper. I haven't had anybody tell me they've seen the specialist book on the test in years. But you do need to know that the New York Stock Exchange can best be characterized as an auction order-driven market. An auction order-driven market. It's a double auction. So as you see here, we have both buyers and we have sellers. So this is the specialist order book for a mega corporation. And those are the limit orders that he's holding. And right now, it looks like a customer of Morgan Stanley is willing to buy 19 round lots, 1,900 shares at $35.20. It looks like a Goldie, and I guess that means Goldman Sachs, is got a stop order there. And then we look over on the other side, we got Merrill. And Merrill has a customer who is willing to sell or is asking $35.60 for 900 shares. Now, the specialist is charged with maintaining a fair and orderly market. And so he's going to have to trade within the inside quote. So if he wants to buy that says acceptable quote to enter for his own inventory, that means he's going to buy into his inventory. He has to do so at a better price than the order he's holding, right? So he can step ahead here of Morgan. If Morgan says, why are you stepping ahead? You say, well, I'm willing to buy it for a higher price than you are. Right, so that's why it's A. What is the range that defines the inside market? Well, remember the inside market. Now, remember, this isn't an over-the-counter stock, so the inside market isn't being determined by market makers on level 3 inputting quotes. No, the inside market in the auction, the double auction, the New York Stock Exchange, is determined by the limit orders. And right now, the person with the highest bid is 35.20, and the person with the lowest ask is 35.60. And so the answer is C. Again, I wouldn't know the inside market as the highest bid and lowest ask. I think that's a little more complicated than what you're actually going to see on your, the real exam. Which of the following has the shortest initial maturity? You should definitely know that's T-bills. T-notes would be 2 to 10 years. Treasury bonds would be over 10 years, and strips are typically longer term as well. So A. If XYZ has earnings per share of $4 and a market price of 64, and they do a 2-for-1 split, well, now the stock is going to be 32. There's going to be no effective change here because, you have twice as many shares, but so does everybody else, right? And so now it's going to be a $32 stock with earnings per share of 2. There's been no effective change in your ownership position there. So the answer is D as in dog. 16. Make sure you have a handle on municipal notes. Make sure you have a handle on municipal notes. So a bond anticipation note is the answer. All the following is a type of municipal note except. All the following is a type of a municipal note except. Yeah, bands certainly are bond anticipation notes. This is testable. Project notes are short-term interim financing to buildings, and revenue anticipation notes. I would add tax anticipation notes. A band, you typically, as a municipal issuer, get that from your underwriter saying, hey, can I have a cash advance against my bond underwriting? All or nones are two things. All or none are a type of order and a type of underwriting. And so it's an except question. So that means the answer is A. But make sure you know that these are muni short-term financing. TANs, bands, and RANs are certainly on the exam. 17, a customer has a margin account which contains securities having a market value of 40 and a debit balance of 15. Again, we need to know the classical margin equation. Long market value minus debit equals equity. Assuming the current SEC regulations apply, how much buying power does the customer have? So what we're going to do is say, okay, well, I'm going to take my calculator. I'm going to take 40,000. I'm going to minus 15. And I find out I have 25,000 in equity. On 40,000, I can borrow up to 20, and I've only borrowed 15. So I actually have 5,000 to buy. How much buy? Ooh, buying power. Be careful. It says buying power. So I have 5,000 in SMA, excess equity SMA. They're not actually the same things, but on the test, I don't think that would do any damage. And 2 times my SMA is my buying power. And so the answer is C. C. An investor places an order of 10,000 shares. He wants as much as possible to very quickly and cancel the rest. The phraseology here is kind of interesting. So it's not fill or kill because remember it says as much as possible. Fill or kill means I want it all and I want it now. And so it's not fill or kill. All or none means I want it all, but I'm willing to wait. A firm commitment is a type of underwriting. And so it is D, immediate or cancel. So these are qualifiers that you can add to an order. I would know fill or kill, and I know all or none. I know immediate or cancel. So far, I told you this is my first exposure to Momitrix content. And so far, I kind of like what we're seeing here in terms of their practice exam. So shout out for allowing us to share this with you. All right, so 19. All the following statements are false regarding callable municipal bonds. You do need to understand that most bonds are callable. There's exceptions to that. But most issuers reserve the right to refinance, to replace high-cost debt with low-cost debt. Very testable. That's called call risk. What prevents the issuer from doing it is called protection. How long before they can call the bonds and at what price? All right, so let's see what this has in store for us. A lot of double negatives, it seems like, a false except, right? So all following statements are false except. So what that means is we're looking for something that is true, something that is true. Call bonds increase in price faster. No, call features are advantageous to the issuer, not the bondholder, so no, right? And that's not true. We're looking for something that is true. Call bonds usually have lower yields. No, they usually have higher yields because you say, hey, Dean, has a higher yield than other bonds I've been looking at. I said, well, not surprised because, you might not get to keep it till maturity. The issuer will typically call their bonds in a decreasing interest rate environment. That is indeed true. So remember, this started by asking us false except. So, one of my mantras, as you know, because you've been with me on the channel for hopefully your SIE testing journey, a victory there. Now you're on your 7, as you know, RTFQ. Read the full question and read the full answer set. 19, the answer is C. When applying the FINRA 5% rule, I don't like they call this a rule. It's a policy, actually. It's not a rule. So, oh well. I haven't decided, what kind of relationship I'm going to have with Momentrix. Thanks for letting me, explicate their content. But, who knows? Maybe I'll send them my emails. Hey, here's my thoughts. But anyways, it's actually a policy. It's a guideline for the sale of open-end investment companies. You should definitely know that's not true. You should definitely know that mutual funds or the investment company after 1940 can charge a max of 8.5%. So by process of elimination, we should have got rid of A. Securities sold through a prospectus are exempt from the rule. Now, I do like the answer set here because the 5% policy is only about the secondary market. It is not about the primary market. So the answer is B. It doesn't apply to the primary market. And that means an offering with a prospectus or the security type is not a consideration. It is, right? Like you're going to buy foreign security in a foreign market. Riskless arbitrage transactions are exempt. No, there's no exemption there. 21. So the answer 20 is B as in boy. 21. Which of the following must be a closed-end fund? So remember, closed-end funds trade supply and demand. And so there's no way an open-end fund could have an NAV that is higher than its public offering price. So as we look here, we see that B has a public offering price of 21, an NAV of 1910. So what must be closed in? I think what I'm going to have to do here, I'm just looking to see. I can't eyeball. I was hoping I would be able to eyeball these things, and I'm not. And so if it's over 8.5%, it's going to have to be a closed-end fund. So I'm looking at the markups here, and it looks like me the one that has the biggest sales charge is that 1910. So I'm going to take 21 minus 1910. I'm doing process of elimination here. And I get $1.90 is the load if that's an open-end fund. And then I'm going to divide that by the public offering price, which is 21, and it comes in at 9%. So I picked the right one here. That must be a closed-end fund because the maximum we can charge is 8.5%. I don't know if you're going to have to actually do that on the test, but I would know 8.5%. And I have a whole video lecture on comparing and contrasting open-end and closed-end funds. That's on every exam, including the 7. So make sure you know the distinctions between the two. Each of the following is true of a discretionary account except. Boy, lots of excepts, lots of double negatives here. So we're looking for something that's a false. All discretionary accounts must be approved by a principal. Shouldn't be struggling with that. All accounts of any kind need to be approved by a principal. So shouldn't be struggling with A. Discretionary accounts must be regularly reviewed by a principal. Yeah, I mean, discretionary accounts can't trade on margin. No, they can as long as the proper documentation is in place. So yeah, B, your manager is going to supervise it frequently and diligently, make sure you're not abusing your discretionary authority. And so it looks like C is going to be each order has to be marked out, discretion exercise, discretion not, whatever the case may be. So the answer is C as in Charlie. Sally short sellers. So Sally short seller has a short margin account with a short market value of 5. Now, maybe Momentrix is doing this intentionally, but boy, they sure are not making the questions set up easily. So as we said, the classical margin equation short is credit register 8,000 minus short market value 5, which gives us equity of 3. And so 50% of 8 is 4, and I only have 3. So the answer to 23, it says, how much excess equity does Sally have? Yeah, I think here we're going to say none. The account is restricted. I'm just checking this out. So we got 8,000 as a credit register minus short market value of 3. By the way, I don't like this. It says, how much SMA does she have? I'm looking for 0. So this one I'm going to say is a mistake. I just want to make sure. So we're going to take the credit register minus the short market value, 5,000. That's 3. Half of, oh no, my bad. So that's why I'm just looking. I don't like it. By the way, if you don't like an answer, then you should either, you can't raise your hand at the center and say, I found a typo. So this is what again, I'm trying not to write on the screen, which I typically do because I'm trying to bring these in a more timely fashion. But anyways, remember, it's half of the market value. Half of the market value is 2,500. So we have actually 3,000, and half of the market value is 2,500. So we have 2,500 in excess equity or SMA. As I said, I don't think that'll cause you to mess up. Let's see, it's not letting me annotate. Let's see if I can get it to annotate. There we go. So D. All right, so 23 is D. 24, Sarah Ross holds a portfolio of stocks and prefers dividend-paying stocks. She prefers dividend-paying stocks. If she's in the 28% tax bracket and she holds a GO bond with at 94 with a basis of 7 and a nominal yield, the key thing we want is that nominal yield. So the key thing we want is the nominal yield. What is the tax equivalent yield? So what we're going to do here, I will show you this math on the screen because it is very testable. So what we're going to do is we're going to take the muni yield, which is 5.5%, and to find out the taxable equivalent yield, we're going to divide by 100% minus her tax bracket. So here her tax bracket is 28%. So 100% minus 28% is 0.72. So I'm going to take that 0.72 and I'm going to divide by that 0.72. And when I do that, let me get my calculator. 5.5. Remember, the only component of the muni that's tax-free is the coupon. So 5.5 divided by 0.72 equals 7.6. And then so here what I'm going to do on 24 is I'm going to say, okay, well, it's 7.4. I think I found another one that's kind of a problem. If she's in the 28% tax bracket, she holds a GO bond with a basis of 7. What they're saying is that's the yield to maturity, a nominal yield of 5.5. What is the tax equivalent yield? So I guess they're asking us about this. This is one I think is pretty poor. Anyways, the answer on this one for test purposes should be 5.5 divided by 0.72, which is 7.63. That's the answer on the test. So again, first exposure to this, and I'll decide whether I want to share that with them or not. 25. Sam Spade is considering investing in mutual funds. He has selected the Mighty Sure Investments to be his broker. Mighty Sure should tell Sam which of the following is the most important consideration when investing his money. Well, it's always going to be suitability, and I'm looking for suitability. The thing that I have closest to suitability is C, the investment objective. Under which of the following circumstances may it be possible to receive a reduction in the maximum sales charge when purchasing a mutual fund? This sounds like a breakpoint question. So shares are purchased by the trustee of a company pension plan. I think what they're asking us here is, who's not going to be able to, get the reduced sales charge. We'll see. Yeah, one is certainly true. 2, the purchase represents a significant dollar amount. Yeah, the breakpoint, that's a quantity discount. That's true. The investor elects to have all of the dividends income reinvested. Yeah, the dividends might count for meeting a breakpoint, particularly with rights of accumulation. Unit investment trust purchase the shares for many of the investments in the underlying plan. No, I don't really care for this question, but it's C. It's C. UGMA stands for Uniform Gift to Minors Act. That's kind of a stupid question. You're definitely going to get tested on Uniform Transfer to Minors Act, Uniform Gift to Minors Act. You definitely need to know Uniform Transfer Minors Act, you can stipulate to the age at 25, UGMA 18 or 21, depending on the state. Kids tax ID number, no margin, one custodian, one minor per account. There's my egg timer telling me we're at 30 minutes. And so I'll turn that over again. These, explications take a while, and, you can take a break if you'd like to. An investor owns 100 shares of XYZ at 36. She wants to limit her loss per share to $4 or less. And she'll accept a longer time for the order to be executed to make sure the loss does not exceed $4. Now, I don't like the phraseology here, but what they're getting at is I think they're trying to trip you up on the difference between a sell stop and a sell stop limit, right? If she just said she wants to limit her loss at approximately 4, we'd use a sell stop, but then we wouldn't know what the next trade is. So here she's saying, Dean, if it gets triggered, becomes a live order, make it a live limit order because I want my price or better. And here her price or better is going to be 32. So that's actually a sell stop limit. And I would know what the difference is between sell stops and sell stop limits. If a registered rep wishes to purchase shares of a risky private equity fund for a customer, according to FINRA, the due diligence process should require. So, private equity funds, venture capital funds, hedge funds are all organized as private partnerships. So that means they're distributed under Reg D. So that means, you have to be an accredited investor or no private equity fund for you, basically. No special actions by the registered rep. You shouldn't take something like that. Written notice to FINRA, no. Written consent. Basically, what we want the customer to acknowledge is they understand that partnerships have illiquidity, right? You can't get in or out of the fund without the permission of the general partner. So all partnerships require written consent from the customer. So that's C. 30, which of the following may not be deducted by a limited partnership for tax purposes? Well, there's a flow through of the tax consequences of an investment, in a partnership. Depletion is for a natural wasting resource, oil and gas, for example. Principal expenses, no. Interest expenses are deductible. And depreciation is a non-cash expense that is deductible. So by process of elimination, the answer is B. A customer should purchase long-term bonds when she believes. I kind of like this question. They're getting at, what is going to be work in your benefit. It's kind of the opposite of the test question, right? So long-term bonds are more volatile. So if you own long-term bonds and interest rates come down, you're going to make some money. So it's A. Now, on the test, it's more likely you're going to get asked on what happens in a declining interest rate, or excuse me, a rising interest rate environment. Shareholder approval is required for declare a cash dividend. No, the board actually decides whether to declare a cash dividend. To declare a stock dividend, no. Again, the board decides that. I'm not a big fan of this thing. Shareholders, so there's another one. So there's two that I have an issue with. I think the first one I had an issue with is question 24, where they're asking you to factor in the discount to the principal. It's going to be taxable. I don't think you're going to have to deal with that. And this is the second one I actually have an issue with in terms of this exam, because none of this stuff requires a shareholder approval. It would depend on the corporate charter. So anyways, but by process of elimination, I'm going to say 2 and 4, and I have that as a choice. And again, I just think this question, 3 and 4, yeah, they're different. So 27, was it 27 I said I have an issue with? I have an issue with, 24 and 32. Please, the channel is self-serve, so don't start sending me a half a dozen emails about the question. It's a question. I'm commenting on it. It's more about learning as we go through the things. All right. So 33, holding a put options as opposed to selling short has which of the following advantages? I always call this smart bear versus a dumb bear, right? So holding a put is a smarter bear than selling short the stock. No dividend payments will be required. I like this, right? Because if you're short the stock and it pays a dividend, you're going to have to make the lender hold on whatever that dividend amount is. So, they pay $1,000 worth of dividends out of my credit register, it comes $1,000. So that's true. 2 is true. If you buy a put and you're wrong, you just lose your premium. So 2 is true. There is no a loss of time value. I think this is a pretty high-end kind of a question. But there is a loss of time value. Options are a wasting asset, time value erodes. So that's a disadvantage. If you're short the stock, you only have to be right about one thing, direction. When you buy a put, you got to be right about direction, down, how far down, and timing. So 3 is not an advantage. 4, smaller amount of capital. Yeah, to short the stock, you're going to have to come up with 50% of the short market value. Here, you just have to come up with a premium. So the answer to 33, I like this question, even though, as I told you, you're not going to get multiples of multiples on the test, but C. Alan Capone, wasn't that clever? Alan Capone wants to open an account at Chi-Town brokerage. So maybe Mometrics is based in Chicago, and this is a hometown reference to Al Capone. Who knows? But it's not want his name to appear on the account. How should Chi-Town respond to this request? It sounds like this is going to be a numbered account. Numbered accounts used to be quite frequently on the test. On debrief, I haven't had somebody tell me they've seen a numbered account question in quite a while, but you know, a numbered account is just for privacy. There has to be a letter on file attesting ownership. Only the manager and the rep on the account need to know who that account is, Al Capone in this case. And then operationally, it works like just any other account. So 35. A company previously issued 6%, $100 par preferred stock. We shouldn't have to tell you par is 100. You should definitely know that. During the following 2 years, the company pays 6. So that's what it's supposed to pay. 6% on 100 is $6. And then 4, it's supposed to pay 6. So it's in arrears for 2. If the company announces a common stock dividend in year 3, how much does it owe its preferred stockholders? I like this. It's called a preferred stock because you have preferential treatment in 2 areas. Dividends, they can't pay a dividend to the common if they're in arrears to the preferred stockholders and in liquidation. And so they're going to have to take care of the arrears of $2 and then the current dividend, which is 6. And so they're going to have to come up with $8 here. I like that. It's very much a test question. I get a lot of people on debrief saying, yeah, I don't know what to make of this. They say, you know, I got more preferred stock questions than I was expecting, and I don't know what they're expecting. 35 is B. Michael Hunt wants to sell some of the restricted ABC shares. So key phraseology here you're looking for as a test taker is this phraseology restricted. Sometimes on the test we say unregistered, we say legend, red letter stock. So that's kind of key. So it's restricted, meaning it came directly from the issuer. You didn't get it in the secondary market. So now it says he's been holding it for the past 18 months. That's cool because that means he's met the 6-month holding period. He has met the 6-month holding period. There are 5 million shares outstanding in the total trading for the past 2, 4, and 6 weeks, respectively. I think this is kind of a nasty here, but remember, it's the average of the last 4 weeks trading volume. And I'm not sure that Michael Hunt anywhere in here tells me that he's a officer, director, or principal stockholder. So what is the maximum that he can sell under this? So what we're going to do is take 1% of the outstanding shares. 1% of 5 million is 50,000 shares. And then we're going to take the average of the last 4 weeks trading volume. So the total trading volume for the past 2, 4, that's the one we need, which is 240 grand. So I'm going to take the 240. I don't think it'll be this convoluted on the test. And I'm going to divide that by 4, and that's 60. So you can sell the greater of. So the answer here is B. I think a good way to remember is 1% of the outstanding stock or the average of the last 4 weeks trading volume up to 4 times a year, 144. 37. Which of the following are false when using a portfolio margining method to calculate margin? So, you know, we have these margin accounts. We have day trading accounts and we have portfolio margin. And the advantage to portfolio margin is you get dynamic kind of margin calls. It's based on the total risk of the portfolio. And the answer here is A, right? So to meet this, you have to have $100,000 in equity. So it's A. Only customers meeting the criteria can get a portfolio margin account. Which of the following is found in the official notice of sale? So the official notice of sale is for competitive municipal bond underwriting. We're going to publish the notice of sale in the daily bond buyer. Attention investment bankers, the municipality is looking for some help in selling bonds. The priority of execution of orders when released to the public. Now, what this is published in the bond buyer to, so various syndicates can be formed. Not two, because we don't have a syndicate yet. We don't have a syndicate yet. So we wouldn't know, the allocation to the syndicate members. That would be done by the manager when I'm forming syndicate. Hey, how many bonds do you want to take down? The method of the interest cost used to determine the winner. Yeah. The one who wins is the one who provides the issuer with the lowest net interest cost in a competitive underwriting. So it's 3. Again, this is one I haven't had somebody tell me they've seen in quite a while, but make sure you understand the spread, members of the selling group not being at risk and the additional takedown and the total takedown and a management fee. Make sure you got that under control. So the IRS thinks that if you sell an investment and take the loss and you buy it back tomorrow, that you really weren't getting rid of the investment as much as you were trying to generate a loss on your tax return. And they're correct. So the IRS says you have to wait at least 30 days to reestablish that position. And so that means we need Roman numeral 2, right? Because that looks like clever, but it says, you're back into the position, right? So if you're clever, because you can exercise the call to get back into the stock position. And then 4, 20 days after selling, you buy the convertibles and you can convert back into it. I wouldn't worry about it being this complicated on the actual test, but you should definitely know that 30-day wash sale. Which of the following documents outlines the allocation of orders? That would be the syndicate agreement. The indenture is the written set of promises between the issuer and the trustee for the benefit of the bondholders. That's the indenture. We said the notice of sale is what gets published in the bond buyer for a competitive underwriting. And the official statement, very testable, is the muni equivalent to a prospectus. It's, so you can make an informed decision. We don't have prospectuses because you know that munis are exempt from 33. 41, all the following option investors, which one would receive a dividend payment if the option were exercised prior to the X date? Which of the following positions? Wow. Of all the following, right, so you exercise your call contract. So you have to be an owner prior to the X, right? So the owner. So you got to have a position where you're actually an owner of the stock. So you remember, seller of the call, you're obligated to sell. Writer of the call, you're obligated to sell. The buyer is going to buy. That works. D, holder of a put, sell. So A, B, and C, you end up selling the stock. The only one here you end up buying the stock is C. An investor buys an ABC corporate bond with an 8% coupon, 10 years to maturity at 80, and then sells it 5 years for 89. What is the gain or loss? What is the gain or loss? Well, here what we're asking you to do, and again, is straight line amortization on this. I don't think it's going to be a test issue, but if we did the math, we would come up with 10. I wouldn't worry about it at all. The only one I would worry about as it relates to accretion on your exam is a 0 coupon bond. Which of the following statements is true when using the portfolio method? The portfolio method. 43. Portfolio margining. I think we just talked about this, did we not? And we said this is a type of account that has it. Maybe I'm going backwards here. Oh, I think it's a second version, right? That's why I told you in the previous question, right? It's based on the risk of the portfolio. It's dynamic margin. It's not, necessarily 25%. A registered rep requires a written power of attorney to execute which of the following discretionary orders? So remember, discretionary authority is required if I'm going to make a decision about action, asset, or amount, the 3 A's. I don't need discretionary authority to make a decision about time and price. So an order that leaves the time and price does not require, a registered rep requires written power of attorney to exercise which of the following discretionary orders. So assuming I don't have a discretionary account, an order, market order doesn't require it. So I can eliminate one. By eliminating one, well, there we go. If I eliminate one, you should know market orders don't require discretionary authority, right? So that means it's 2 and 3. I don't like the phraseology here. An order that leaves the execution of time and price up to the registered rep. So this is another one where I kind of, with a couple we've run into here in our friends at Mometrics that I'm a little wary of the third question where I kind of had an issue with it. If a corporation raises $10 million by issuing preferred stock, the par value, which of the following will increase? You shouldn't have been struggling with current assets go up, right? Because, we just got $10 million from selling the preferred stock. So you shouldn't have been struggling with that one. And so that means we need Roman numeral 2. Now that's kind of helpful because that helps me with the process of elimination. Let's see, net worth goes up. So the net worth goes up, yeah, because, that's kind of high end because we remember it's assets minus liabilities equal net worth. And we just plugged 10 million into shareholder equity. So that's true. Total liabilities, no, preferred stock is equity. I kind of like that. You should know that preferred stock is equity, not debt. So we should have been able to eliminate 3. So 2, I think you should have been able to get to, and I think you should have been able to eliminate 3. So let's see. I want 2 without 3, 2 without 3. Okay, so I still got to look at number 4. Quick assets. Well, quick assets are the current assets less inventory. And so this isn't going to go into inventory. So indeed, that is true. So the answer is C. I wouldn't get too hung up on balance sheet questions. I would have a general understanding of working capital and current ratio, that kind of thing. Joe Jacobs buys an ABC convertible bond at 85. Who cares? With a conversion price of 25. We do care about that. This is very testable. Can't be fumbling around with this. When given the conversion price, we have to establish the conversion ratio. So what we're going to do is we're going to take 1,000 par, and we're going to divide by the conversion price of 25 to establish the conversion ratio. This is very testable. So 1,000 divide by 25. I found out the conversion ratio is 40 shares. So that's really important. He converts the bonds 6 months later. So he buys a convertible bond and he converts it 6 months later. So now we need to know he bought it for 85. So that's $850. 85% of par. And he turned it into the stock. He turned it into 40 shares of the stock. And so now I'm just figuring out what was his cost base on the stock. So he took 85, 850, divide by the 40 shares. And we find out that's 21.25 is what we converted at. That's called parity. Buying this at 850 is the equivalent of paying 21.25 for the stock. You are going to get a parity question. And then it says we sold it for 23. So now I'm going to take the 23 minus the 21.25. So 23 minus 21.25. I get $1.75 on 40 shares. A lot of work. But, this is testable. So let me see what I do when I get that. And hopefully that's one of the answers. And I have a $70 gain. So 46 is D. Let me just put that there. It equals times 40 shares equals $70. Again, that is something you're going to have to do on the exam. Very important takeaway. Whenever you get the conversion price, you need the conversion ratio. 47. Which of the following statements is true? All the following statements very much are false, except false except. So one of these things is true. The payouts to investors are dependent on the performance of the separate account. The separate account is mutual fund. You'd be doing yourself a great service if every time you heard the word variable annuity, you said mutual fund with an insurance wrapper. And so the answer to that is A. You should know that life only is the largest payment. So you should have been able to get rid of B right out of the gate. And there's nothing about the rest. The interest rate is assumed to be the rate required now. A. 48. Which of the following best describes dollar cost averaging? Dollar cost averaging is very testable. You need to have fixed dollars invested regularly. That's C. That's very tough. So you end up with a lower average cost, and those are the underlying shares, and it doesn't guarantee a profit. So 48, the answer is C. Which of the following bonds, a sinking fund? A sinking fund is where the issuer sets aside money to pay back the bonds at maturity. And a bond with a sinking fund is going to have better credit quality than a bond without, and that's typically for term bonds, right? So it's called funded debt. If it's not that, then I say, trust me, I'll figure it out when I get there. That would be unfunded debt. So D. 49 is D. Dewey, Cheatham, and Howe brokerage acquires a large block of ABC for 39. 2 weeks later, they're quoted at 34, 34.15. Which of the following must the firm use as its basis when selling to its customers? So here what we're asking you about is that your markup or markdown is based on the current, price, right? So if I'm going to sell it, it's going to be at 34.15 is the current price in terms of that. Growth stocks would typically have low dividend payouts. That's true. They typically are more volatile. So we're looking for 1 and 4, which is choice B. We know that beta is a measurement of volatility as compared to the market as a whole. I would definitely know that. 52, determine the purchase price of a 6% bond that has a coupon of 6.5 using the teeter-totter or seesaw. You should know that that's a bond at a discount, which is choice C. You shouldn't have to be breaking a sweat on that. Determine the purchase price of a 6%. Oh, whoa. That carries a 6.5% yield to call after 5 years. RTFQ and has a 6% basis. So 6 per coupon, 6% basis, fancy word for yield to maturity. So that's a bond at par. So boy, I misread that. I almost fumbled on that a little bit because I looked at this and didn't see that it said yield to call. So, read the full question. 53. ABC broker-dealer is a member of a syndicate that is offering new shares of XYZ common stock to the public. The size of the total offering is 10 million shares, with the allocation to ABC being 1 million. After selling its entire allotment of 1 million shares, its entire allotment, 1 million shares remains unsold. How many of the remaining shares is ABC responsible for? Now here, I'm not sure where I'm going to go back and look. A member of a syndicate. It's not telling me here whether it's a divided or undivided syndicate, Western or Eastern. So 1 million shares remain by other members of the syndicate. Other members of the syndicate. Oh, I see. The syndicate is in the answer set. Okay, so now I'm back in business. Okay, so I'm responsible for 10% of the unsold shares if it's Eastern. So that's going to be 100,000 shares. So that's Roman numeral 3. And if it's Western, I'm done. I said I would sell 1 million. I did 1 million. So, I'm done. So it's going to be 53 is going to be A, 2 and 3. Kind of funky the way that Momentrix is. I like the content. I've had 3 questions where I have issues with them. But the content itself, I think it's clunky. Some of the questions are kind of clunky in terms of how they're worded, but at the end of the day, it's about what does it help you get a higher score. Each of the following is a false statement about an ADR, except I can't imagine any draw in which you're not going to get asked about ADRs. The actual shares are not held in the custodial bank. That's true. Again, these double negatives are kind of challenging, right? They're saying false about an ADR, except. Right? So the investor cannot receive dividends in cash. The investor does receive dividends in cash. ADRs represent shares of U.S. securities trading in foreign markets. No, the investor does not actually receive the certificate. Again, clunky way to ask that, but you should definitely know that ADRs facilitate U.S. Investing in foreign securities because it trades here in the U.S., and you should definitely know they have foreign currency risks. So the rest of this, I wouldn't worry too much about clunky phrasing, but you are going to get tested on ADRs. Sarah Sweet owns 10 of the mega corporation's convertible bonds at 110. It says the can be converted at 22. That's kind of odd. The 8% coupon has 23 years to maturity and form a majority of Sarah's non-stock holding. What is the current yield? So this is simply to take the coupon, $80, and divide by the current market price, which is 110. So 80 divided by 110 is 7.27, 7.3, close enough. There's a lot of extra stuff in that question. The holding period of 144 applies to which of the following? So the holding period is when you get restricted stock, right? So the control stock may or may not, because if control stock is all the stock held by the persons who are associated with the company. So here it says a non-affiliated person is probably which of the following? A non-affiliated person who's held restricted stock for 3 months. Yeah, it looks like everybody else has held it for the 6 months or more, so it's B. None of the following are considered owners of a corporation except, boy, I'll tell you the phraseology. Now, maybe Momentrix is trying to stretch your mind intentionally by giving you these double negatives and kind of odd phrasing. But remember, common stockholders actually own the corporation. They have an ownership equity position. Sally Peterson wants to open a new margin account at Speedy X Brokers. According to the Know Your Customer rule, Michael Hunt, the registered rep at Speedy, should obtain Sally's investment objectives. This is called the Know Your Customer rule. The Know Your Customer rule, certainly. Sally's birthday, yeah, we want to make sure she's not a minor because we don't open accounts for minors directly. And her risk tolerance, absolutely. 1, 2, and 3. 1, 2, and 3. An investor has the following investment results for the current year. So I have capital gains of 40, 20, and losses of 45. Oof. What I'd like to do is take $25,000 in my portfolio losses against my paycheck or earned income. But no. The max I can take is $3,000. I like this. It's testable, and then I carry the rest forward. So I would definitely know that. It's A. At the shareholders meeting, Bill Francis intends to vote for 3 open slots on the board. He owns 100 shares, and voting is a cumulative basis. So this is called cumulative voting. So I have 1,000 shares, and we're voting on 3 slots. So I have 3,000 votes, and I can spend them in any fashion I'd like. So it's 60. Yeah, it's a total of 3. So I don't like the phraseology here, but it's 3,000 in total for each of the 3 total. I think that would be a little except. Okay, let's see this. Let me go back here again. It's conducted on cumulative basis, acceptable to vote except. So 1,000 for each of the 3, yes. Okay, yeah, that's right. I don't have 3,000. That what B says, I'd have 9,000. I can put 1,000 on each, yeah. 3,000 for one, yeah, because my buddy, why not? Why not? So the answer is B as in boy. An investor purchases 3 July 40 puts at 3.5 and purchases 300 shares at 45. Now, the minute you get the stock, you got to stay focused on the stock. And so you got to say, okay, this is a stock position. The stock dominates. So I wouldn't own that 300 shares there unless I was bullish on the stock. And then it looks like I spent some money for some protection. Looks like this is a protective put, right? So 3 months later with the stock trading at 86. Now, the problem here is I've interrupted my holding period because, my holding period is, got to be at risk for 12 months. What does it break even? So this is the one time and the one time only that we are actually going to kind of say, okay, well, let's see. An investor buys the 40 puts for 3.5. He buys the stock for 45. At what market price does he break even? Yeah, I'm going to go for C here. I just don't like the phraseology again. But on the test, you want to be able to tell me you understand that you're out 45 for the stock, you're out 3.5 for the protection, so it's 48.5. I'm again trying to find my illustrator here. XYZ is offering 8 million new shares to the public. The price to the syndicate is 28. The public offering price is 29.25. So the spread is $1.25. The takedown and concession for each share is 75 cents and 30 cents, respectively. The managing underwriter receives 25 cents on every share sold. That's the management fee. So if we look at the spread here, the spread is 75 cents. right? So the takedown and concession. The selling group is allotted 1 million shares and sells them off. How much does the selling group make in revenue? So what we're looking for is the concession. So we have to figure out what is the concession to answer the question. And the way we're going to get the concession is 30 cents, right? So 30 cents, that's my timer saying we've now been at an hour. These things come in and, it takes a while to do this. My channel has longer form narrative, so you can take a break if you like. But we made 30 cents on 1 million shares. And so it looks like what we're going to make is 300,000. I would be prepared to do that on the test. So see, there's our 30 cents. Again, the phraseology here, our friends at Momentrix, is kind of odd. But, the content itself is very testable. So the answer 62 is B. A client writes a June 40 put at 5 and is exercised before expiration. So that means I bought the stock at 40. That's what it means, is I get exercised on a short put. The underlying stock is 44. Assuming no commissions, the result of the transaction is, well, good news here, right? I got 5 points. It looks like I lost a point on the stock. So let's see, 40 put, so 5. My break even was 35. The stock is 44. And so we know commission, the result of the transaction is, I'm just looking here. Oh, let's see, a month later, the client sells the underlying stock. So I bought the stock for 35, right? 40 minus 5. I sold it for 44. So I made 9 points. By the way, what you'd want to do on this one, what I would probably do, let me get an annotation tool here, is I'm trying to avoid setting these things up and, actually spending a lot of time on stuff. But, I sold the 40 put for 5. So that's going to be 5 green here. I'm just showing you the setup. And then I bought the stock. So I got exercise. That means I bought the stock at 40. And then it says I sold the stock at 44. So that's what that looks like in terms of a T. And there's my 9-point profit. So as you know, if you've been with me for a while, that I believe what you should do is track money in and out. All right, so that was that one. 64. All the following are true regarding the buyer of a put except. All the following are true of a buyer of a put except. So a buyer of a put, remember, is a smart bear. And what I mean by saying they're a smart bear is because of all the bearish things you can do, that's one of the brighter ones. All the following are true. The maximum gain per share is equal to the strike price minus the premium. That is indeed true, right? The most I can make is when the stock goes from my strike price less the premium, break even, to 0. That's true. You should have been struggling that the maximum loss is the premium. That too is true. The position is used as a hedge on a short position. No, the hedge on a short stock position isn't a put. It would be a call. So this is not a hedge on a short position. Could be a hedge in a long position, but not a short. Yeah, the issuer and guarantor of all options is the OCC. And so 64, the answer is C. An investor sells XYZ stock at a loss and buys XYZ call options within 30 days. Aren't you clever? It looks like what you're trying to do is avoid the wash sale rule. So anyway, it looks clever on the test. You go, right? A customer purchased 100 shares of stock at 30 and writes a 40 call at 2. So again, as I said, what we want to do, let me get this out. We want to track the money. So we purchase the stock at 30. And let me put that in red. We write a 40 call at 2, so that's there. Put that in green. Okay, and then the reason you want to be really good on the setups is because you want to be able to track the money in and out, right? So the offset, this is called the offset. So here we go with the offset. If the customer closes both positions 3 months later with XYZ trading, or HSC trading at 35. So let's put that in there. And the 40 calls at 3. Let's put that in there. What is the gain or loss? So it looks like that I'm out 30, I brought in 37 and I paid out 33. So it looks like I made $400. So the answer is C. Right, I just total up those two numbers. All right, investor has just opened an option account and is in order to buy a XYG July 30 call at 300. What's the maximum potential gain? You should definitely know that when you buy a call, the maximum gain is unlimited. D is in dog. D is in dog. 68. And in order for an investor to transfer a security account from one broker to another, each of the following must occur except the investor must fill out the ACAT form. That is true. We cancel open orders. That's true. It's not 10 business days. No, I have 1 business day to verify, 3 days to transfer. And so that is not true. So the answer is C. Let me just get this to C. Boom. Betty Brown would like to open up a cash trading account, which means she wants to pay in full. That's what that means in English. And give trading authority to a third party, her son, John. Which of the following forms are needed to open the account? So we're going to need a joint account. No, it's not a joint account. A new account form, shouldn't be struggling with a new account form. We need that for everything. So we need 2 for, any kind of account. A power of attorney for the son, yes, 2 and 3. It's not a margin account. Hypothecation would be for a margin account. That's where you're pledging your securities as collateral for loan. It's in street name, so the answer is B. A double barrel bond is a muni bond that has 2 pledges or promises. The first pledge is a user fee, but the second pledge is the full faith and credit of the municipality are insufficient. By definition, it is C. Now, I would like you to know this, but, also C is too long to be wrong. Too long to be wrong. Which of the following is not part of the cooling off period? You should definitely know that an issuer under 33 makes a registration statement, enters into the cooling off period, which is a minimum of 20 days, very testable. We're going to, during that cooling off period, use preliminary prospectuses, known as red herrings, that don't have the final offering price. We're going to accept indications of interest, which are non-binding on all parties. And then the stabilization is what's going to take place perhaps if we need to, once we have the effective date. So the 71 is D. I don't particularly like this question, but I would definitely know about the cooling off period. You should know that a 147 is an intrastate offering of securities. Intrastate offering, and the key thing to know is you have to have 80% of your assets in business, the issuer within the state, and you can only sell it to residents of the state. After 6 months, they can sell it to non-residents. So the answer is B. That's very testable. Which of the following would be least of interest to a fundamental analyst? A fundamentalist is not a member of the religious right. PE ratio, certainly. Working capital, certainly. Historical prices, no, that would be a technical analyst, Sam Steiner purchases an 8% coupon billing corporation bond. Callable in 8 more years. Yield to call is 8.75. Billings recently received an upgrade, but not from Moody's, but not S&P. A lot of things. How much did he pay for the bond? Now, the only thing that's important here is it has an 8% coupon, and it has a basis of 8%. So that means, again, par. Your teeter-totter or your seesaw. Your teeter-totter or your seesaw. So 74 is B. John Bondman purchased a callable municipal bond, revenue bond, at a current market price of 97.2. The bond may be called in 5 years with a 0.5% call premium. It has a coupon of 6. It's triple tax-free. What is the current yield? Oh my God. I told you this is my first exposure to our friends at Momentrix question. A lot of stuff that has nothing to do with answering this question. We're simply going to take what the investment pays us. 6% on par is $60. Divided by what it costs us. And what it costs us is 97.2. And we're going to divide those two numbers. And when we get that, it's going to be C. By the way, you should know that it can't be B, right? You should know that. So you're just going to simply, when you get current yield, is take and divide by what it is. I don't think you'll see this expressed on the test as 97.2. It'll be traded in eighths. It would be a fraction. What is the appropriate action for ABC brokers to take if they receive one signed, and one unsigned? What we're going to use is a stock power. A stock power is assignment to transfer separate from the certificate. So I'm not going to send them back to you because I'm already halfway home. So I'm going to keep them, call you, say, hey, I need you to fill out or give me a stock power. Assignment to transfer separate from the certificate. I haven't had in a while anybody say they've had to calculate accrued interest, but you should know for corporates and munis, we calculate from the last interest payment date up to, but not including settlement. And every month has 30 days. So you owe me for all of July. That was the last time I paid interest. If I'm the seller, you're the buyer, you owe me for all of August, all of September, and part of October, up to, but not including settlement. So it says regular way settlement is the 4th. So the day before that is going to be the 3rd. And so we're going to total all those up and we come up with B. 30 days in July, 30 days in August, 30 days in September, up to, but not including settlement. Settlement would be T plus 2. So that would be the 5th. Would be T plus 1, and settlement would be the 6th. So 95 days. A workable indication is, again, a type of muni when it means I think I can do it. So it's likely I'll give you a bid, but I want to do some homework. Haven't had anybody tell me they've seen that in a long time. What regulatory body is responsible, can be purchased on margin? You shouldn't be following around with that. All credit extension of broker dealers to customers is Reg T. Reg T is controlled by the Federal Reserve Board and is part of 34. Very testable. Yeah, I don't think I worry about 80. The answer used to be 520. I wouldn't worry about that. I would know when they expire, which is this answer. So that's what you need to know. And by the way, you can tell their exam needs to be updated. It's not the Saturday anymore. It's the 3rd Friday. So yeah, it's a reasonable value proposition. But again, I haven't decided if how much issue I'm going to take with Momentrix on the content, because again, at the end of the day, I'm interested in using it just to give you more performance opportunities. Of each of the following bonds were all issued by the same corporation. Each bond is callable, and the Federal Reserve has raised interest rates 1/4%. Which bond is most likely to be called? And so what we're looking for is the bond with the highest coupon and the longest maturity. The highest coupon and the longest maturity. So it's going to be the A. Each of the following would change the strike price of an option, except, so I would have used the Sesame Street trick here. A normal cash dividend would not. And again, I think that's a little overkill. It looks like that they have some questions here that used to be quite testable, not any longer. Which of the following statements regarding individual retirement accounts are true? A multiple of multiple. Contributions are made with pre-tax from pre-tax dollars. Yeah, what we mean is you're going to be able to deduct it. That's what that means in English, so that's true. Contributions of IRA are made from post-tax dollars, and others are mutually exclusive. And then Ross are going to be after-tax money, so I don't like the phraseology, but it's testable. And then Ross, remember, have no required minimum distributions. 84, a customer buying 10 corporate bonds with 6%. A conversion 25, callable in 5 years, will receive semi-annual payments. Looks like Momentrix likes to give you lots of stuff that has nothing to do with answering this question. So 6% is based on par. Par is 1,000. That's $60. That'll be paid semi-annually. So half of $60 is 30. I have 10 of them. So 10 times 30 means I'm going to get $300. I would know that bonds pay semi-annually. A customer owns 200 shares of GHY at 90 and wishes to hedge the position, key phraseology, generating additional income. That is the key phraseology. That's selling the call. Which of the following statements regarding IDRs, industrial development and revenue bonds, is false? The bonds are backed. No. The bonds are backed by the municipality. Which of the following is false? They are known as a special tax bond. They are issued to construct a non-revenue producing facility. The money raised is to construct a facility for a private corporations. So which of the following statements are false? And, they're not issued and backed by the municipality itself through taxes. It's corporate credit that backs the bond. So this is another one I kind of have an issue with in terms of the answer here, but I'm going to go for B. But what you need to know on the test is that corporate credit backs the bonds and they could be subject to the alternative minimum tax. Matty Perry is a 64-year-old investor who determines he should have a defensive investment strategy. Which of the following would most likely meet Matty's needs? So municipals are pretty safe. High yield bonds are not safe. You have credit risk. Global fixed income have currency risk, exotic option strategies. So given my answer set, I know I'm going to take one. And so that means I have a 50-50 and I've got to decide whether I want 3 or 2 and 4. I'm going to go for A, the bonds are going to be the safer version of that. Not a big fan of that. The thing that's testable is defensive stocks that deliver products and services resilient to the business cycle. A customer purchases a new issue of ABC automotive bonds, anticipating the government will back the car maker if the time gets tough. The confirmation since the customer, a lot of extraneous information here. It's going to have 1, 2, and 4. You don't have the current yield. You can figure that out by taking the coupon. All the following shares trade at 256. Which of the following holdings is considered to have traded for purposes of reporting? So let's see here. Let me get rid of that. 65 shares. So that's an odd lot. That's an odd lot. Yeah, again, this is, they got some questions here that, if it's over, again. So we found a couple of these questions where, they're just, who cares? If a technical analyst defines a head and shoulders pattern, very testable. Head and shoulders is a signal of reversal, and this version is the end of the bull and the beginning of the bear, right? So it's a reversal of the bullish. That's very testable. If it was an inverted head and shoulders, it would be D. It would be D. ABC common shares are offered as a new issue at 30. After trading commences, the shares begin to drop. The XYZ syndicate responsible for the offering may place all the following bids except. You've joined me for 24 class. This is testable. It's got to be at or below the public offering price. So we would not be allowed to do this at A because it would give the false impression that it's hot. So I don't think you're going to see that on your 7. In order to buy 200 shares at 25 stop limit. So we're going to be looking for the trades, and we're looking for a trade out or through 25. And then as a stop limit, she wants to buy for 25 or less. And so let's see, do we have a trade here? Let's see, 24.95, nothing happens. 25, boom, boom, boom. So now we have a limit order. So now the order is triggered and she's a buyer. She wants to buy it at 25 or less. So that's unacceptable. That's acceptable. And so we would say on 92, the answer is B. I like that one. That's a good one. What organization is both the issuer and guarantor of all options? That's testable. That's aim and shoot, point and click, a test question. I like that one a lot. It's the Options Clearing Corporation. Sam Specs purchases 1,000 shares of Megacorp at 30 in his margin account. If this initial transaction is in the outer bounds allowed under Reg T, what is the loan amount? Well, I tell you, it's some interesting phraseology, but remember the loan amount is 50% of the purchase price. So, it's a kind of a complicated way to get at it. It's 15,000. The indenture of a corporate bond, remember that's the written promises between the issuer and the trustee for the benefit of the bond holders. So includes all the following. The rating is assigned after the fact by one of those things. So the trust indenture. Answer is C. 96, when a municipality chooses an underwriter to complete the issuance of a new issue, the offering is considered to have been taken place on a competitive basis, a negotiated basis. So if you just choose the underwriter, don't make them compete, right? The municipality chooses an underwriter. The offering is considered to be negotiated. Competitors when we put it out to bid. So I don't like the phraseology. I think they're going to tighten this up from negotiated. The way to know it is issuer selects the underwriter, Competitive is whoever provides the lowest net interest cost. Well, when you annuitize, we're going to turn your accumulation units into annuity units. And then your, check is going to go up or down based on the assumed interest rate. And so when we annuitize, we're going to change the annuity accumulation units into annuity units. It's going to be fixed, right? Those are called annuity units. So, yeah, you might see that. And then you should have a general understanding of the assumed interest rate and how the check goes up or down. An investor opens a long margin account by purchasing $300,000 in securities. She signs the hypothecation agreement. Very testable. That's mandatory. That means she understands if she doesn't fulfill her responsibilities, we're going to sell her out. And a credit agreement, very testable, mandatory, telling her that, she's paying interest based on broker call. Each of the following is true. The securities can be used as collateral for the loan. That is indeed true. If the market value of the securities declines, the debt balance will increase. That is not true. The securities are held in the street name, the name of the broker dealer. Yeah, so if you don't fulfill your responsibilities and you're paying interest on the debit balance, indeed. I like that one. That was a good one. A CMO is carved up from a mortgage pool. So you don't have the credit risk in a CMO. What you have is interest rate risk. You either have more or less depending on which tranche you bought. And so it's going to be AAA. Usually what we're carving up are Ginnie Maples for test purposes. You determine your customer, Renee, retired, 65-year-old retiree, should have a defensive investment strategy. Each of the following would be suitable except, all these other things. I would use the Sesame Street trick here, right? One of these things is not like the other. A blue chip stock, by the way, is a stock of a corporation that has a proven track record in good times and bad. That's what a blue chip is. In poker, it's the most expensive chip. An investor wishes to purchase shares at $6.50. The shares are outside the risk profile. The investor insists on making the investment over the advice. The registered rep should. I like this one, right? We mark it unsolicited. We say that was your idea, not our idea. But we do have to follow our customers' instructions. You should definitely know the support and resistance level. You should know that as a technical practitioner, I would put a sell stop below the support level. And I put a buy stop above the average trading price. Nope. The lower band of the trading. Yes, that is correct. I like this question. I don't think it's the phraseology you'll see on the test, but I like it. And then I would know C would be the resistance. Let's see. An investor with the following two options positions. You are short a call and short a put. You're short a straddle with different strike prices. A straddle with a different strike price is called a combination. You wouldn't do anything differently. Maybe the options are going to start showing up here, but boy, we sure so far haven't had many options as compared to the actual test. A customer sells 100 shares at 43 and buys a smart bear here. This is a very smart bear. So this person said, you know what I think I'll do is I'll establish the choice to buy back the borrowed stock at the strike price. So I'm hoping you can look at that and say, hey, smart bear here. So my maximum loss. So I brought in 43 for the stock. I paid for the protection 3. So I brought in net 40. And the neat thing here is there's a ceiling now at 45. So the most I'm going to lose is $500 instead of unlimited. That's what's so cool about buying the call. The buying the call changes this short stock position from unlimited risk to limited risk, which is bueno. XYZ is selling additional shares of common stock to its existing shareholders through a rights offering. You should definitely know the rights are short-term and at issuance are exercisable below the current market price. You should be able to contrast them with warrants. If you want to subscribe, you're going to send the stuff into the rights agent. So you can exercise them, you can trade them, or you can choose to let them expire. Which of the following is the advantage of a variable rate? I haven't had anybody tell me they've seen variable rate questions on options, or excuse me, munis in a long time. This was a major horror story. It's A. Haven't seen anybody in a long time had it. And it's usually never the good news. It's the bad news. And, going up or down. Which of the following securities are exempt from state income taxes in all states? I kind of like this, right? Territories of the United States government. are exempt in all the states. All the states would like to tax you, but can't. So you should have not been struggling with Puerto Rico. And Treasury bonds, the states would like to tax you, but can't. You should definitely know that the Ginnie Maes are fully taxable. So you should have been able to eliminate one. By the way, that would have got you the answer, just knowing Ginnie Maes are fully taxable. And then Treasury bonds are taxed at federal level, but not the state level. And revenue bonds depends on where you live and what kind of bond you're going to buy. With regard to the customer account, a registered rep with limited trading authorization may. So limited trading authorization means I can make investment decisions for you. I can't withdraw monies in securities, so it's a B. A customer is interested in purchasing equity securities with the objective of receiving dividends. Which of the following is least likely to be a suitable investment? So we're looking for dividends, and warrants don't pay dividends, right? All these other things do. I would definitely know that warrants are long-term, exercisable at issuance above the current market price, the exercise price. They're usually used as a sweetener. Which of the following are characteristics of corporate debt securities? They are senior to the preferred and the common. That is indeed true. They represent ownership. And you're a creditor, not an owner. So we need one without two. One without two. Thank you very much. The answer is C. They represent all, yeah. Again, lots of multiples. You don't get multiples on the Series 7. Peter Piper has made several very successful option trades over the course of the past 6 months and would like to use these successes as a basis to attract more customers. If he intends to include these picks in his advertisements, he must also include the entire universe for the entire 12 months. I don't think you're going to see this on the Series 7, but it's the entire universe. Each of the followings trade in the money market. So all of these are money market securities except, well, not money market, trade. If, I don't like this question. And the reason I don't like it is, credit default swaps. I don't know how in the heck they expect you to know that that is a credit default swap. Anyways, as I said, let me know your comments on this. I'll timestamp it. I'll probably put my comments overall and my impressions on Momentrix. I have no affiliate relationship with them. I still think it's productive. So let me know. I've got permission to do all their exams. Just let me know your thoughts. Maybe I'll in the playlist rank the practice exams. You got 4 that are written by me. You got 1 by my buddy Desk Geek. You got 2 from Kaplan, and now you got this one. So I think they're productive. I had somebody took exception to one of the Kaplan ones, and I said, well, if you don't like it, then you can hit stop anytime you want and watch something else. Victor Vance maintains an unrestricted margin account. So that means it's not below 50%. After a significant move, his SMA has risen to 12,000. Given this much, how much did the value of the stocks held in his account move? How much did his equity go up? So they're asking you, what is the excess equity? And if we got 12, it means it went up 24. Again, I don't really think this is something you're going to have to do. All test prep vendors go way, way overboard on margin. On a test, you're going to get 3 or 4, and they're really straightforward. Covered calls, you should definitely know, are used to generate additional income. So it will increase the yield. You should have been struggling with A. You do get some price decline protection from the premium, right? You're lowering your out-of-pocket cost. Reduce the size as it gets called away from you. Yes. Generate profits when the underlying stock is expected to drop significantly. No. If that's what you think, you should be buying a put. So D. A principal in some cases must review and in some cases approve each of the following activities or occurrences except letters recommending securities to clients, yes. Forms establishing discretionary authority, yes. Written complaints, yes. Internal communications, no. One of these things is not like the other. I would know what retail communications are, which require pre-distribution more than 25. Correspondence, pre or post distribution, 25 or less. So you should definitely know that. You're long a 60 put at 8 and short a 50 put at 2.5. You should know that that is a debit put spread because you have more money out than in. Joan will profit if the premium widens. Yes, debits, you profit if the, remember, do, debit, exercise, widen. So that indeed is true. You'll profit if they're exercised. You'll profit only if the profits. No, remember, if it widens, you can profit as well. Joan needs at least one of the options to be in the money to profit. Yeah, you remember, you need the stock to go down. So you need that 60 put to have some intrinsic value. I think that's kind of an odd way to phrase this question. But, I have a lecture. There's 8 things you got to know about a spread. Now we've been at 90 minutes. Let me turn over my timer. You can take a break. I'm going pretty quickly here. I'm trying to get these things done in as timely a fashion as possible, these explications. When performing strategic asset allocation for a 60-year-old customer, which of the following is true? Each of the following is true, except. Each of the following is true, except. So the customer's retirement plan should be considered? Absolutely. A general rule of thumb is 100 minus the customer's age. That's true. A large should be in cash if the equity markets have been particularly weak. No, that would mean you're doing timing, and timing is not strategic. Rebalancing should be formed regularly. Yep. William Torrey has a short margin account with a short market value of 40 and credit of 80. You should know the classical margin equation. Short is credit balance 80 minus market value 40, which equals equity of 40. What is minimum equity maintenance on the account? You should definitely know that minimum maintenance is 30% of the short market value. So 30% of 40 is a C, $12,000. Should definitely know that. When an investor in a joint tenants with rights to survive account dies, very testable. The decedent share goes to the surviving party. That's very testable. You should be able to contrast joint tenants with rights or survivorship with tenants in common. An investor purchases a 45 call for each, while ABC is at 47. If it goes to 50, I think my break even's 49, so 50 is going to be good. Which of the following statements is true? The investor has a cost basis of 49 if they're exercised. That is indeed true, right? Because I paid 45 for the stock plus 4. Cost basis follows break even, so that's true. You'll realize a profit of 450? No. A strangle? No. So yeah, hey. All the following are possible reasons that a broker-dealer may be allowed to deviate from the 5% policy, except. Yeah, you don't get to base it on what your cost is. It's based on the contemporary, the current market. The current market is, right? So trade involves a liquid security? Yes. Trade's very small? Yes. Broker's cost base is more than 5? No, it doesn't matter what I brought it into inventory at. Odd lot? Yes. Debt to equity of a corporation measures liquidity? No. Liquidity would be current ratio, quick ratio, working capital. It's leverage. It's leverage. Corporation is trading at 45. Which of the following is in the money? Call up. So a 40 call is in the money, right? If the stock's trading at 45. Put down. So A. Which of the following documents triggers the acceptance by a partner? Remember, you have to be accepted by the partner, general partner, and that's called the subscription agreement. So very testable. No, you can't get in or out without the permission of the general partner. Each of the following must be registered at the SEC, at either the individual state or SEC, except. So they're asking you which one of these doesn't need to be registered either federally or state. And it's a Reg D private placement. I think you'll see that more on your 63 or 66. When an investor buys common stock that increases in value, how is the result to be taxed? Well, if you don't do anything, you don't owe any taxes on it. But if you do, when an investor buys, increases in value, how's the result categorized? Depreciation? It's going to be taxed at either long-term rates or short-term. Again, not another one I'm a big fan of. Which of the following is true of Reg D? A Reg D is a safe harbor under 33. And if it's a 506B, we can only have 35 non-accredited investors. Right? So it's not 5 million. You can raise as much as you want a Reg D. Offering in the home state, 147. Nope. Block trade, no. 129, Frank Samuelson is CEO of Megacorp, a large multinational conglomerate. Wow. They've negotiated the acquisition of Accretive. The deal will be announced in a week. But Frank is so excited, he tells his friend Bill, uh-oh. So Bill now has material non-public information. The conversation was overheard by the waiter, John. So now John also has material non-public information. John calls his uncle Mike, who now has material non-public information. Bill, John, and Mike all buy the shares. The following persons have violated the rule. I kind of like this one. We don't have any thing here that tells us who traded. Let's see. No, we do. So Bill, John, and Mike all buy shares the day after the lunch. The following have violated the insider trading rules. Yeah, I'm going to say everybody, but the waiter doesn't know about probably material non-public information. I'm not struggling with this one, but I'm going to say what you should say on the test, that everybody is in trouble. But when we look at the answer set here, right, we know that Frank should definitely know that what he did was wrong. Ignorance is no excuse before the law. And, we should definitely know that, too, his friend Bill should kind of know that what he did is wrong. So, but the other guys, they can still get in trouble. So I think they're looking for 1 and 2, but we should say everybody. Which of the following is true regarding bonds purchased at a premium? Yield to maturity is greater. No, teeter-totter seesaw, very testable. It's going to be lower. None of the following are covered by the Trust Indenture Act of 39. Yeah, it says none of the following are covered except, boy, the language here. The Trust Indenture is about corporate bonds. So the answer to 131 is A. Wow. I'll tell you, this phraseology is tough. Breakpoints are quantity discounts. So I like this one. So the 989 is based on not getting a breakpoint. So 25,000 means our friend Peter is going to pay 6.5%. So what we're going to do, it says he's got 25,000 to invest. So there's a couple ways to proceed here. One way I can do this is take 25,000 times 6.5%, which is 1625. So I could take the 25,000 minus the 1625, and everything else is going into the fund at the NAV, which they tell me is 9. And I get 2,597. 96 is close. You can always pick what approximates your LED display. The other way I could have done that is I could recalculate the public offering price based on paying 6.5%. I could have taken the NAV 9 and divide by 0.935, 93.5%, and get 962, and then take the 25,000 divided by 962. So a couple ways to proceed on that. Boom. Barry Bonds purchases ABC Corporate Bond at 80. How much does he claim in taxes each year? The bond matures in 10 years and he holds it to maturity. It's going to be, again, I don't know why Mometrics is asking you to do these types of questions about accretion and decretion. The only question about accretion or decretion is a muni bond purchased at a premium where you do that. I haven't seen that thus far, so I'll just toss out that question. But which of the following statements are false with regard to Treasury strips? You should definitely know that strips are the government Department of Treasury version of a zero, right? It's a zero coupon bond. So you should definitely know that 1 is not true. 1 is not true. So false. So we need 1. The principal and interest are paid at maturity. Investors pay taxes annually. Yeah, it kind of sucks. You're paying taxes on money you're not actually receiving. And the investor paid taxes on maturity. Well, yeah, each year you're going to be paying taxes. So the answer to 134 is A. Which is false, right? Because it's asking us false. Boy, the phraseology on these Mometrics, man. The par value of a corporation's stock. All par values are arbitrary numbers. For bonds, 1,000. For preferred stock, 100, and for common stock, $1. So it has no relationship to the market value. It's inversely related. No, it's an arbitrary number, just like golf, par 5. Somebody arbitrarily decides that 5 strokes get you to the hole, in the hole. Yeah, D, it's arbitrarily determined by the placeholder on the company. Yeah, I like it. The keyword there is arbitrary, D. All right, so again, this will be our 8th practice exam. Remember, inch by inch, your Series 7 is a cinch, yard by yard. Series 7 is hard. Let me think, give me your comments on what you think about this practice exam as compared to the others. I have Momentrix, shout out again to use their content, give you a free look at their content. And they do publish, I'll add my little review. I literally just bought this thing and put it up on the screen to share it with you. So, and I plan on doing that with each of their, at least one of their exams. But let me know if you're on your way to 66 or 63, if we should continue to do explications of their content, or should we call it a day? I'd be interested in your thoughts on that. Okay, I'll see you next time, and this will be a premiere on a Thursday, probably, in the next couple of weeks, depending on when I'm coming to you. As you can see, I'm coming around Christmas time because you can see Rudolph there in the back, and you can see the Christmas tree. So it'll be up before 2023.